Go. Start from the beginning. So first off, we want to kind of see what's happening with mortgage rates. But before we jump into that, today is a very special day. It is Columbus Day, and it is the only day out of the year where I can tell the worst joke on the planet. And it is this. What did Columbus say when he found the Americas? Whoa, land. Yes, it's terrible. I told you I warned you. It's horrible. But hey, I love it. I think it's hilarious. So if you're not laughing, I am. So there you go. But so happy Columbus Day, guys. So interest rates, yep, just like this arrow shows, they are up. It's actually, you know what? I didn't put this graphic in. I'm going to do it real fast. It's actually not as bad as it could be. Hold on one second while I show you. I'm going to show you this real cool graphic that I just found. My phone is going crazy right now. Boom. Slideshow from the beginning. All right, I'm going to start this over real fast. I'm going to show you this slide that I found. So this is the slide that I found that is really interesting. So basically what this shows is over the last several years, what the Fed cut did. And I kind of talked about this in the past, but this is a really good illustration of what the Fed cut does to mortgage rates right away, and then what it does to them in the near future. So if you could see, and I'm going to my annotation things here. Hold on one second. Annotate. I'm going to use my arrow here. If you see this date right here, 1984, when the Feds cut rates, there was a spike in mortgage rates of 30 basis points. If you look down through this section right here, as you go down here, look at this. Every year except for one, mortgage rates spiked after the Feds cut the Fed funds rate. So a lot of people are questioning, they're scratching their heads as to why. But if you look, the drop after the first cut, which happens several months later, 2 to 4 months later, is significant. So now the 10-year was at 12.25. It went down to 5.3%. It went down to 6.95 here. So after a few months, guys, we will get the relief. There's always that initial pause to see, okay, what did this cut do? Is this cut going to make money cheaper? And is there going to be an inflationary period? So a lot of bond traders, they cash in their chips, they sell off, they figure out, okay, well, what's going to happen? They want to watch the markets to see what happens. And that's where you get these spikes from. So it's very interesting. I wanted to show you this because it's not just me saying it. It's almost every time there's a Fed cut, you see this pretty dramatic spike in rates. And then later on, if you see what the prediction is for September 18th cut, it was 50 basis points. It rose almost a half. And we're hopefully the 10-year at 3.7 will get down to 2.35. That's a 1.35% cut. That means mortgage rates will probably be 1% below. So we're going to really keep an eye on that. That's what the future should bring if the inflation stays tame. And that's where inflation, guys, is the enemy of interest rates. So we're really going to watch that carefully. So let's keep going here. Get out of this and move right along. If it will. Come on. There we go. So this is the mortgage-backed securities. These are the candlestick charts. If you look up here where we were at our finest, we had a rate of about 6.125 without any points. Now we're just bouncing off the bottom of this Fibonacci level right here, this line going across. That's our Fibonacci level. That's keeping us above ground right here. So we're kind of we're stuck. We are stuck right now in this little pattern. Hopefully we'll get some good information this Thursday, and I'll go over the calendar in a little bit to bring the rates back lower to where they were a couple weeks ago, because that was really nice. I was locking people in the fives without having to pay too much in discount points. It was very nice. We were a little spoiled. We hadn't seen that in a while. And then we lost all of it pretty quickly when the jobs numbers came out last week. So not very fun when the jobs numbers come out. Again, it's the BLS jobs report, which is always wrong. But when high jobs numbers come out, when the Fed's expecting low jobs numbers, the market reacts very violently like it did. So let's have a look at what the 10-year is doing. The 10-year soared. I mean, look at this increase. I mean, this is just a spike, just a huge spike from 3.6 to 4.2, 4.125. And that is just a solid pattern. And hopefully we'll break that, and we'll see what the near future holds, because the 10-year, when the 10-year goes up, mortgage rates go up. They are very tightly connected. So anytime you see the 10-year go up, just know that mortgage rates are going up. So this is the perfect scenario. If you are a 780 credit score, if you have a 30% down purchase of a primary residence, and it's a single family detached home, and there's a full documentation loan, everything's perfect, you're going to be right in these rates. You're going to have 6.64, pretty traditional 30-year fixed. 15-year, you're going to be in the low sixes. FHA is still low sixes. FHA, if you have really good credit, FHA is a pretty good rate right now. So some people, instead of doing 5% down conventional, they're doing FHA to get a little bit better rate. And then if you want to do an ARM, I don't know why you would, because look, 30-year fixed and an ARM about the same. So the trend right now is kind of on the negative side, but we'll see how the future presents itself as we open the markets open in the morning tomorrow. So here's what's happening in the market. Yes, I have surgery this Thursday. Thursday's a big day, and I'll talk about that in just a second. But we have jobless claims. We have the Philly Fed manufacturing survey. We have retail sales, auto sales, which is pretty weak lately. So we should see we should gain some ground here. I'm hoping. Not much else going on. Yes, I have surgery this Thursday. I'll be out for a couple days. I'll be working from home, probably resting. If you don't know, I do have prostate cancer, so they're getting that taken out of my body, so I'll be cancer free, hopefully by the end of Thursday of next week. So that'll be a big day for me, but I'll be out those 2 days. So if you're trying to get a hold of me, it'll go directly to Sandy on my team or Christy. So they're going to be covering for me while I'm recovering. And what else we got going on? Tricks and treats for condominiums. This, guys, is near and dear to my heart. Condos are a pain in the rear end. And here, let me tell you why. First off, condos have to go through a approval process at the same time the buyers are going through one. So one of the biggest problems we've seen with condo approvals is you can't really, there's no way of doing them, or there hasn't been a way of doing them before. Like when you take the listing, you go through the process with that lender. But there are some tricks that I want you to know going into it. If you're taking on a listing for a condo, what you need to do to set your sellers up for success. So that's what I'm going to go into right now. And first off, I want to say, please beware of the financing section in the MLS when you're posting a new listing for a condo. Most of the real estate professionals out there will fill this in based on the loan size that's available for this property. So if the property is under the conventional loan limits and under the FHA loan limits and in the VA loan limits section, usually, and this is not everyone does this, but usually we'll put an FHA, VA, conventional, and cash, all of them, because they're in the limits of those loans. However, there are some tools that you can look up when taking a listing to see if that condo is truly an FHA approved condo, if it's a VA approved condo, If it's a conventionally approved condo, yes, Fannie Mae and Freddie Mac do have an approval list now. I'll show you how to get that. And of course, cash you can do. So I'm going to walk you through some tricks so that you can do this properly when you're filling out that financing section. First off, for conventional loans. Now, this is important that you take some preliminary measures to do this right at the time you're taking the listing. Because the only person that can look up through Fannie Mae and through Freddie Mac to see if it's an approved condo is the lender themselves. So I have access to go in through our own portal directly in to see if they're on the blacklist. And yes, there are some condos that are saying, nope, we cannot do this. Fannie Mae will not do this condo for whatever reasons, or if it's approved. And then if it is, if we go in there for you and we look at it and it is blacklisted, the second step to see, okay, why is it blacklisted? Sometimes their insurance coverage is off. Sometimes their budget is off. Sometimes the amount of the occupancy factor is off completely. There's too many renters in it. We need to figure out why. And if that has been remedied since the last time it was looked at, maybe we can get it approved. So if it is already approved, then there's just a few things we need to check to make sure the insurance is up to date, make sure that there's a few questionnaire things that we need to complete, but it's pretty easy if it is approved. So if it's approved, we'll go in and see what else needs to be done. But these are the two websites that I would go to make sure that that is approved. Now, you, unfortunately, as a realtor, do not have access to these websites. I would have to do that for you. So now that's conventional. FHA loans. Now you can do this on your own. Now you can go, and this is a little snapshot of what it looks like. This area right here that I'm going to be circling, this is what you fill out on this website up here. You click on this website again, or not again, but if you Google this, if you Google FHA approved condos, the very first line item is this website. So FHA approved condos, just Google that. This HUD link will be the very first one. When you click on that, when you click on this little link right here that's circled, you will then go to this page that shows this little area to fill in the details of where the county is. The least amount of information you put in, the better. So what I would do is I would put in the count. I would just do the city and the zip code, and that's it. And then hit, and you have to choose Arizona or whatever state you're in right now, and then hit send, and then it'll pull up the approvals. And this is what it looks like on the right-hand side. So you'll see this one's rejected. It's missing documents or the package was incomplete. So somebody started an approval process for this condo development and didn't finish it. Now, does this mean that we can't get it approved? No, we will then go through a separate process where we do an FHA spot approval. It's kind of what it is, or a single project or single unit approval. We can do that. If it's approved and expired, it'll show you that it's expired and then show you the date in which that expiration happened. And that's right next to it. So you can see that the one below that is approved. And this is what it'll look like. It just says approved. And then you're golden. There's a few things we still need to do, but we look at this. It's approved. You can now put on your listing, this is an FHA approved financeable project. But if it says expired, you cannot put FHA on your MLS listing. You could put in the comments, lender willing to do FHA approval as part of the process. You can do something like that. If it's rejected completely, then we need to look at why and then try to get that remedied. So FHA, that's the way you do it. You can do that on your own. And if you do need help getting it approved, I can figure out why it's been declined. And then we can go forward with an FHA approval for that unit. VA loans have a very similar process. So when you go into VA, if you type in Google, VA approved loans or VA approved condos, this is the link that pops up, and it's called a condo report. So it's a different term. So if you see condo report on there, that's what you're looking for. And you click on this link, and then you see below the request a customized report. That's when you fill in the details for that condo, and you put in the name, the regional office, which is going to be Phoenix, and then you put in the city, or you could just do the state. Now, another trick, and this is for buyer's agents. If your buyer is looking for a condo and they're an FHA buyer, the first thing you need to do is go into the FHA website, okay? Look at the zip codes that your buyer is interested in. Check, just give me all the approved FHA condos and get that list of all the FHA approved condos first before you start giving them access to the portal. That way it eliminates everything that's not approved. That way they don't tell you, yeah, I want these 5, and then you go out them and you look at them, they're not FHA approved, and that could be a problem. So look at it, same with VA. If you have a VA buyer, they're looking for a condo, look at the report first, make sure you know what condos in those zip codes are VA approved, and then just look at those. It'll save you guys a lot of time. Hold on. Sorry about that. So if you look at the approved report, you'll see what it looks like: accepted without conditions. You'll see pending. You'll see rejected. Notice that was pending, and it was in 2015. It went pending. Obviously, somebody didn't finish that process. So we can try to get things VA approved as well. It just, the process is a little different. Gosh, I'm losing my voice, it sounds like. All right, so that is the looking up system. That's how we look up condos. Now, here's the treat. Now, excuse me. Condo pre-approvals. This is something I'm going to start. I don't think it's ever been done. So I am spearheading something new. I'm probably going to get in trouble for doing this with my condo department, but they've already said they can do it. So I'm going to hold their feet to the fire. If you have a listing that is a condo, I can do all of the legwork up front for you to make sure it is approved. And if it's not approved, I will do and order the condo cert ahead of time to get it approved so that you can move forward with confidence on this condo. So if you have a potential listing, you can offer your seller as an added value of what you provide, having your team of professionals with you to help them get this thing sold quickly and efficiently. Because once you have the condo approval, the lender can move a lot faster. You can also finish the financing section properly and accurately, speed up the closings, eliminate the last minute condo denials. Because if you've ever had a listing and you go through the process and all of a sudden there's an issue with the condo and it becomes non-warrantable, everything changes. We don't want that happening during the process. And then all buyers must be approved by me in order to go through. That's the kind of caveat. So if I go through all this work, I need to get a shot at the loan. So let me get them pre-approved. We can match rates, whatever it might be, but you can put in your, loan is approved. The condo is already pre-approved through Woolen Mortgage Team, must get pre-qualified through Woolen Mortgage Team, just like builders do or anyone else does on that preferred lending team. So we can do this ahead of time for you. It is an investment. So it's almost like back in the short sale days when title companies would pre-order all of the title reports, get everything ready to go to submit to the lender. This will get everything ready to go for us to submit into underwriting to get a really quick approval. So just a little treat as we move forward. That's something that I'm going to be offering that I don't think anyone's ever offered this. So starting something new. And don't forget, guys, we have a $5,000 guarantee on our pre-approvals. This guarantee is for the sellers. This is when you make an offer, when somebody is pre-approved to the Woolen Mortgage Team, the sellers can rest assured that that's not going to blow up, that loan will close because the Woolen Mortgage Team has already guaranteed that buyer has the ability to close. That gives the seller a lot of confidence. If there's a multi-offer scenario, then they'll choose your pre-approval over different lenders every time. So that's what I've got to go say today. And it's a big week. And if you have any questions, I'm going to be wide open now for any questions you may have regarding condos or rates or anything for that matter.
Go
Anyone
ahead
have
and
any-
approve Granite Creek condos in Prescott for me.
Granite Granite what?
Granite Creek
Granite Creek.
condominiums.
Okay, I will write that down. Granite condominiums. Anyone else have any condos that they're looking at? Granite Creek. Debbie Davy. Sorry, just taking notes on my remarkable pad. Any other questions or needs for, and I'll do that just after the call, okay, Debbie?
Was this because of that condo collapse
Kind
in
of.
Florida?
Yes and no. So if you remember, let's go kind of back in time. Back in 2008, 9, and 10, the debacle that happened. So FHA cleared out all of their approved condos and basically started fresh. So there's not a lot of condos that are approved because of that. But then what happened in Florida, like you're saying, they changed a lot of the regulations for condos. And part of them are if your condo is a certain age in Florida, the condominium HOA must, and this is like they have to do it, retrofit their buildings to fit the building standards for whatever that might be, right? So they may have to do special assessments on the condo, and the insurance companies are going to say, well, if you're not retrofitted, we're not going to insure you. So that insurance on some of these properties in Florida is going absolutely through the roof. So if you're an HOA and you're trying to get insurance, and now the insurance is saying, well, and now instead of the master insurance policy being $25,000 a month, it's now going to be $50,000 a month. Well, the only way to recoup that is two ways. You raise the HOA fees, or you increase the deductibles on everything to make it cheaper. Well, that's what's happening. You're seeing a lot of condominiums raising their deductibles outside of the regulatory limits that Fannie Mae and Freddie Mac and FHA require. Well, FHA doesn't have any percentages for those, but Fannie Mae and Freddie Mac have these limits. You have to have at least 5% deductibles on these condominium insurance policies. And if you don't, it's a non-warrantable condo. So that's one of the things we check on all condos. And a lot of these are doing 10%, 15, and 20% deductibles now to cut the costs way down, because insurance is one of the most inflationary pieces that we have in our economy right now. So that is a huge problem with condos. So checking the insurance is one of the biggest things we start with. I've run into 2 condominiums in the last month where the insurance policy has changed their deductibles and now they are non-warrantable. One of them we're actually getting FHA approved, and we're switching the customer from a conventional to an FHA because FHA does not have a percentage requirement for their deductibles. They just need the proper coverage for replacement costs. So there's some tricks to getting through the weeds, so to speak, on condos, but they are a pain in the rear end. They truly, truly are. So getting it ahead of time, figuring that ahead of time is really, really important. All right, Cactus Flats, I'm writing that down too. That's Robert. Perfect. Amy Powers, Villages North. Sorry, I'm writing all this down so I don't lose it. And 85304. Perfect. So condos are always a pain in the butt. But this should help really eliminate some of the rural frustration that I know some of you have had with condos in the past. So if you need anything on that, again, just call me, send me the information. If you just want me to pull up the list of approved condos in the zip codes. I can do that to you. It's pretty simple to do. I'm happy to do that for you. But any other questions regarding what rates are doing? The feds most likely will cut a quarter next time. Maybe not at all. It depends on what these jobs numbers and inflation numbers keep reading. It's going to be interesting to see. So any other questions? The townhouse HOA charges separately for insurance. How does lender know if not included in HOA fee? We will know. The insurance agent should know as well. So now we have to make sure it's truly a townhouse. So one of the biggest problems with HOAs and townhomes is the marketing name for complex may be Phoenix townhomes, but they're legally condos. So we need to make sure we know what those are. But if the HOA does charge separately for the insurance, we need a copy, or we need to know what they need to insure. So that's part of the process that we need to know ahead of time, especially with townhouses, because all we care about as the lender is that their insurance policy covers all of the total replacement cost for that townhouse. So we'll have to figure that one individually, but usually the insurance agent will know, or the listing agent may know by their sellers and asking them what kind of policy they have. We can dig into that a little bit deeper, but most townhomes are completely owned. And there's some, there's a master insurance policy. Sometimes we'll know that as we go in, because we ask all those questions, but there's a lot of different ways we can dig into that. Any other questions regarding condos? Hopefully this will help you guys. And if you do need anything on them in the future, yes, the approved list, FHA, VA, I'll email all of those links out to everybody. And so you have access to the VA, FHA. You can't have access, unfortunately, unless you're a licensed loan officer for the Fannie Mae and Freddie Mac list. But if you want to know, you can always just call me as well. But the links, I will send everyone those links for FHA and VA, because those are readily available at any time. Can you call me? Absolutely. I will call you, Roger. I said Roger, Robert. I always do that. I don't know why I do that.
This is great
Perfect.
information. Thank you so much.
You're very welcome. But yeah, I hate condos just because it's like a mystery. Every time you get a condo, it's like a mystery you have to dig into the box to figure out. So let's solve that mystery before we get a buyer on it. And let's get out there and make some impact on this market. All right, guys. Well, if you don't have any questions, I'll stay on if you do. But if not, I will go ahead and Robert, I'll reach out to you, and then the other requests, I'll get those information over to you as well. So you guys have a phenomenal week, and we will be in touch.
You have a phenomenal week,
I will.
and thank you.
You're very welcome.
Mhm.